Hi everyone and welcome to Trades of the Week. And this week we're going to talk about some super duper important news. Now, this week they're going to come out with the inflation numbers. So what will that mean? And last week we spoke about that OPEC has cut production by 1.66 million barrels per day starting in May. Now, what does this mean for the market as well? And Morgan Stanley has come out with 5 warning signs for a potential recession. And will gold or cryptos, maybe even oil, be the investment to choose then? And today we're also going to discuss the crypto that has the absolute, by far, most users. The crypto that has the most users in gaming. Now, you might not be aware of this, so you do want to watch this episode to see what that is. Now, before we jump into today's episode of Trades of the Week, we have an announcement to make, and that is this. On Saturday, this very Saturday, we're going to have a crypto masterclass. It's going to start at 10 a.m. in the morning and be a full day. It's going to be completely free, so sign up by the link below. Now, with everything that's happening in the world, it's never been a greater time to get started with cryptos. So make sure you sign up before we run out of seats as well. And you will be learning the basics of cryptos. What is it and how do you get started? And the top cryptos out there, what are they and what are they doing? Not only that, we're going to show you why now is the absolute best time to invest. And also, how you can join the crypto revolution that we have in front of us. So with that being said, let's dive into it. So as usual, let's start with the Buffaloes. So before we dive into the updates today and what the market is doing and what we expect moving forward, let's do have a look at what's happening in the market. So the first thing I do want to just put your eyes on is the Buffalo strategy. This is a strategy where we trade and only, I repeat, we only risk 1% on every single trade because that is trading. We take advantage of the shorter term movements in the market. So the first one we're looking at is GIS, General Mills. We have put the stop loss at 3% at 84.18. That's where we have the stop loss at the moment. So if it breaks higher up to the 4% mark, then yes, then we're going to move the stop loss up further. So that's where we have it at the moment. So soon we're going to be able to celebrate that. The next one is MPVR, Monolithic Power Systems. So this one is a slightly in a loss at the moment. So you can get in as a short to make money going down. So you can do that, right? You can get in at a better price than we have. And next up is Netflix. We still have our stop loss at 1%, roughly at $323.57, and waiting for this to go up as well so we can raise the stop loss a bit higher. And we're also in VRSN, Verizon Inc., where the stop loss is at 2%, so at 207.48. And when we break higher, we're going to move it up to 3% as well. So we have locked in a lot of profits here, which is awesome. GM, we got stopped out at break even. We were up 1%, so that's a shame, but no loss on that one, so no harm there. And Peloton, we have the stop loss at 1% as well. And then last week we looked at 2 trades, so IGMS, IGM Bioscience Inc., and we got this just carried on down, right? This is the importance of always entering with a stop order. So we were looking at this green candle over here, and it was up here, but never went up enough to get us into the trade. That's a stop order. The trade needs to move in our direction before we get in. That's the whole point with this. So that's really good. We were not as lucky on PEG. So on PEG, we actually got minus 1%. So that's a boo, but that's part of the game. And as we then lock into some profits up here, it's going to turn really nicely to the green. So before we jump into 2 new ones we have today, I do want to just get your attention to some of the news that is happening. So we know that OPEC, they're going to cut rates. So not cut rates, but cut the oil production by 1.66 million barrels per day. So some analysts predict that we might see oil prices at $95 to $100 per barrel. And looking at oil at the moment, I do want to just jump over to it quickly. We can see it's roughly at $80 at the moment. So it would mean oil to go up another 12 to 20%. And that would be really, really good for the oil stocks. And last week we did enter an oil stock, so I'm going to look at that today as well. And Last week as well, which is a bit bearish for the market, we were expecting to get 225,000 jobs added, but now instead we only got 145,000, which is not great. So that was under prediction and the market fell as a result, but it have rebounded. So in the shorter term, it does look very promising, and we will see tomorrow what's going to happen, because then we're going to get the inflation data. And 66% are expecting a 0.25% basis point hike. And if that is the case, then if we get that, then the market's probably going to react to the upside, because then that's going to be like, yep, that's what we expected, the market goes up. So that's what we expect in the short term. But if, and there's a big if it's not that case, if they, for example, do a 50 basis point hike, then the markets will drop. So keep an eye out of that. Keep an eye out for those numbers. And really interestingly, Morgan Stanley came out with 5 red flags. Now, the first red flag is the yield curve. And I want to just get your attention to this here. This is the yield curve between the 10-year treasury bond and the 3-month spread. So what you can see here is, and which is really interesting, this is it's inverted at the moment, which means it's actually in the minus percent, where you get more money from the short-term bond than the long-term bond, which is never really a good sign, because people don't really believe in the long-term then of the sustainability of the economy. But what's interesting here is you can see that in the 90s, we got a minus, right? Inverted, it's minus in the red zone. And then you can see, boom, a big drop. And that was also coinciding with a drop in the stock market. Same happened beginning of the 2000, the same thing happened there. When it inverted a year after or so, the market collapsed. Same in 2007, 2008, the market collapsed. And then in 2020, we had Corona. The same thing happened here, and boom, the market collapsed. And now it's up at really high points at the moment as well. So in the medium to longer term, this might play out if history is repeating, as though we might see a collapse in the market. Now, the good news here is that we can actually hedge. Maybe this will be the time where gold and silver really goes through the roof, or maybe oil does. So we're going to speak a bit about that today as well, how you can hedge and prepare for this. Secondly, it is expectations that the companies, their earnings per share will drop moving forward. And also the PMI, the measurement we have of activity in the economy, if it's below 50, it means that the activity, the number of jobs being created, etc., actually is dropping. And we see that with unemployment being below average as well. And also lending standards. I don't know if you got a loan recently, but it's getting worse as well. So these indicators are showing us a little bit of a stagnation or contraction of the economy. So even though the markets might be heading higher, at least in the shorter term, as we see here, just be prepared that we will have some pullbacks along the way. This is obviously this is some red flags. It does not mean that we are in a bear market that we will get into a deep recession and the markets might collapse. We might actually see the opposite. When they start to print, the Fed will pivot, as they say as well, then we could actually see a big rally in the stock market as well. So we're a bit torn there on which direction it will take. But historically, when we get these indicators I just showed you flashing, then we usually have a drop of 4.5% of the market in the next 6 months. So we could expect some lower prices, but when we're trading, it doesn't really matter, and that's also why we're adding one long and one short today. So KTB, Contour Brands Inc. is looking good. We have a nice green candle, a good 3-to-1 reward risk ratio, where we are risking $1 for every $3, right, we can make. So this looks very, very good. A nice trend with higher highs and higher lows. Secondly is Vert. This is Virtue Finance. And Virtue Finance is, look at it be dropping, right? It's a downward trend. And write this down if you haven't. The trend is your friend until it bends at the end. So this is one we're looking at very closely as well. Now we're going to jump into cryptos, right? This is a stock update, and when we're trading, it doesn't matter if the market really goes up and down. But looking at the crypto update, one thing I want to bring your attention to is that we do have on Saturday the Crypto Masterclass. 10 a.m. it starts, a full day with no other than Marcus DeMaria, who's going to do it live for you, because we want as many people as possible to get started with cryptos today. So make sure you have a look at that as well, and sign up by pressing the link below. You're going to be learning everything, how you get started, the various strategies we use, and how you can be part of the biggest revolution in the innovation space we've seen in centuries. And this is going to create millionaires. The biggest transfer of wealth is what we usually say. But looking at cryptos, what we're seeing here is that Bitcoin broke 30,000, which is great news. And we have this zone we've been speaking about before as well. And it could be that we will maybe have a pullback from here, right? Could have maybe go up a bit higher, but then a pullback lower. And then after that pullback, we could go higher once again. So we think we're definitely in a very bullish phase in the crypto space. And what I want to mention to you today is that now some of the bullishness in the market comes from the Shanghai update for Ethereum, which is taking place the 12th of April. So I think the outcome of that, we'll see if we're going to drive the market even higher or maybe even get it lower. But that will unlock so you can actually withdraw the money you have staked. Finally, right? You can unlock your Ethereum, you can withdraw them and sell them if you would like to as well. So it could be that we will have some downward pressure or downward movements in the shorter time, but highly bullish for the crypto market as a whole. And that's not only it, right? We have some other things we do want to talk about as well. So, for example, Twitter, we all know about Twitter, but they are going on a Dogecoin craze, right? And Dogecoin, they have changed its bluebird logo to Shiba Inu dog meme, and that has caused a 30% increase in Dogecoin because obviously it's Elon Musk behind Twitter now. And we don't believe it's a buying opportunity. It could, of course, go up more, but it's meme coins. I'm going to discuss what that is in a moment for you. So just don't jump in on the hype, and that's not what we're doing, at least. And if we also have a look at Coinbase and other kind of companies in the US that are having a bit of challenges. So Coinbase and 5 other plaintiffs, they filed a motion for summary judgment to reopen Tornado Cash for all US citizens. So they argue that the crypto mixer cannot be sanctioned as property, that the government's action violate the constitutional rights. So in essence, Coinbase is fighting the SEC's or US stand in the crypto world. So we know from earlier news that it is very challenging for crypto companies to be in US. They're looking to move outside of US as well. But Coinbase is doing really well, being one of the biggest crypto exchanges in the world. We're going to talk about that a bit more later as well. And one thing that's really cool here is that the NFT market platform, or the market space, has exploded, reaches 2 billion in February, in March following that suit as well. So the NFT market is definitely part of the future, and it will grow, and we are looking closely at it to come out with what could we be investing into when we head into the next bull market. So that's really, really interesting. And one other piece of news I do want to mention to you is Matic. Now, Matic, they have, for those of you who are new, it's a layer 2 scaling solution that scales Ethereum. And they are surging in daily activity, in daily addresses, so more and more people are using it. And they recently launched a new chain, enabling smart contract migration from Ethereum to Polygon more seamlessly. It's really interesting. And analysts, they predict the Polygon price to rise nearly 12-fold in 8 years from now. And we believe that could absolutely be true when the real adoption happens in cryptos. So if we have a look at Matic here, we can see that it has gone down a bit. We have invested all the way down here. So if you're new to this and you're looking at Matic now, being down from the high 60% is an amazing buying opportunity at these prices, we believe. And that's the first one. The second one, speaking about NFTs, this is WaxP, one of the biggest, well, this is the biggest gaming platform in the world. So they have over 314,000 active addresses and users. And looking at Matic, who is the closest competitor, they have 138,000 active. So with WaxP being down 93% from its all-time high, or roughly 81% from its recent high, where it's never recovered from, we believe this is an incredible opportunity to be investing in at these prices with a small cap strategy as well. So very, 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 very interesting, we believe. So those are the two cryptos we want to mention today. So one token to avoid as well is the meme coins. Now, meme coins have taken the crypto market by storm, right? And they are investing in them can be very risky and speculative, as you know, because they don't really have any underlying value. Mostly they are a coin where you can buy and sell with, and also, which is very very interesting. They were created as jokes, many of them. So they have a picture of a dog, and then you can buy and sell with them, which is great. But most of them actually have an unlimited supply, which is the same as the fiat currencies like dollar has, which is why we love investing into Bitcoin instead, because Bitcoin has they have limited amounts of coins, which is 30 or 21 million coins in total. So therefore, we're a bit hesitant investing into Doge. Shiba is building something else now, but the likes of Doge and Tama Doge or Robot Era as well. So be careful, and we are not getting into that hype because we can't find any fundamentals in that as well. So very, very important. Now, stocks to avoid. Let's jump into the last segment here. We don't really have any profits to take here on our VCAs, but the one we added last week, which is an oil company, we invested at minus 20%. It's currently up roughly 6% from that. So congratulations if you got in. The last one now we're looking at is Coinbase. And Coinbase is a cryptocurrency exchange, as you know, and from the all-time high is down 80%. And now from the local high being down 23%, we think it's a great first entry to get into Coinbase, which has a great outlook if you believe in cryptos, that is. And the sector to avoid right now, which is usually lagging a bit, is real estate. According to Bill Rudin, he's a CEO and chairman of Rudin Management, and they have worked in commercial real estate for a long time. And he says that he's concerned because a lot of the banking sectors now have challenges, and they're obviously the biggest backers of commercial real estate. So he says this could be a challenge, and also there could be some warnings in relation to that as well. So when you're investing or developing in real estate, just be careful with that as well, because if we get it's not really liquid, is it? And we know it's getting harder to get mortgages, etc. as well. So that's a sector we're putting a bit of a warning flag on, short term, but longer term, real estate has always been an incredible opportunity for investments. So before we wrap up for today, let's jump into the results. So 11th of April, and this week we have made 1% loss on our Buffaloes. So we're down to 72.28% profit in total. Boo, right? But it's really good still. So VCAs were up a massive 2,279% on the money invested. So on the running positions, we are down a little bit, worth saying. And with cryptocurrencies, we're up 1,510% on the money invested. Small caps, 4,220% on the money invested. So obviously we're down a bit on those, but these are the closed results, and there will be a time to put the seeds in the ground and a time to take them out or take the flowers out or let them grow. And that's what we're doing now. We're planting the seeds and investing in the bear market. So I really hope you enjoyed this version today of Trades of the Week, and comment below. What did you enjoy the most? Is there anything you want us to analyze or look at together with you? Let us know. We're here to support you. And with that being said as well, don't forget the Crypto Masterclass now this very Saturday. So press the link below and sign up today. It's going to be free with one of the masters in the industry, Mark De Maria, with over 20 years of experience in there. So sign up now. Make sure you do it. And if you do enjoy the content you are seeing here, make sure you hit that subscribe button and also the alarm bell and the like button, so we can help the YouTube algorithm, so we can reach even more people as well. But more importantly, by pressing the alarm bell, you will get notifications whenever there's a new update coming out, so we can support you in that as well. So from myself and the whole team at Investment Mastery, we wish you an amazing week, and we cannot wait to see you on next version of Trades of the Week.